as more financial results from listed companies trickle in, analysts at Assar Investment believe that the Nigerian equities market will react positively, consolidating on gains from January. Muktar Mohammed, an analyst at Assar Investment, joins me now for this discussion. Muktar, let's get into what we're seeing play out in terms of these earnings that we're seeing trickle in into the market, and how are you reading all of this?
Good news for the market, especially when you have a macroeconomic instability like what we are having now, or will I say stability or volatility. So it's good news for the market. We've seen those results come. We've seen two banks giving us their audited result, but still waiting for CBN to approve in terms of their dividend payout. That is Fidelity Bank and FCMB. These are tier 2 banks, but we could begin to classify Fidelity Bank as a bank that is moving towards being a tier 1 bank with a kind of robust result and interim dividend payment that they started. MTN, of course, we're excited with the result, and they're still paying dividend, and they will reward the investors. We want to see how these stocks will respond going forward when you finally give those bonuses to those investors. Will they be trading it? Will there be demand for it be higher and then bring down the price, or will still have price movement? Unilever, the result was quite okay. But you know what is happening in the consumer space. There's a lot of issues that have to do with that space when it comes to money to spend because of inflationary pressures. Guinness Nigerian PLC wasn't as fantastic as other people thought it would, and the market responded to that result by that stock losing yesterday. So definitely we'll see response, but the elephants haven't come yet.
Yeah, definitely, because I'm going to get to those elephants here, some of the big names, especially in the banking space. And I'd like to first start with that sector and get your thoughts around what we can expect from some of the big names and how you think the year 2022 was for the banks.
Well, for the banks, the year 2022, I think after the election, we'll definitely know what direction we are moving. Because you and I know that when it comes to an election year, governors take the back seat. Whatever they have told us in terms of budget, you will see the new administration coming, whether it's APC, whether it's PDP, whether it's Labour Party, they will definitely run to the National Assembly for supplementary budget. So that's where we'll begin to know where it's going to plan in. For the banks, I think the normal banks suspect are still there. You still have the Zenith Bank of this world, the GTCO. You still have UBA, Access Bank, First Bank. We expect them to do very well this year. Not minding what the Moody downgrading is saying about. Thank God, they say it will be stable in the long run. So definitely we expect that before the end of this year, there will be stability, and those banks are also going to enjoy those stability. So what am I expecting? I expect them to still pay what they paid last year. It will be a shock for them to pay anything less or anything more. One place I think we might have a shocker, and why investors are still looking at that space, it might be in Access Corporation, because their normal interim dividend of 30 kobo, they were not able to pay. They brought it down to 11 kobo during half year. So investors are skeptical of that stock, especially looking at its expansion drive. So there seems to be not too much of those liquidity that were there have been put into acquiring other assets outside the shore of Nigeria. So that's only where I think investors will be cautious. But for Zenith, I expect them to pay what they paid last year. For GTCO, I expect them to do the same, even if the results are not as fantastic as they were last year, especially for GTCO. But again, in terms of liquidity, I think they are very robust in their liquidity.
Yeah, but looking down the line in terms of the first quarter now, because we're seeing this activity play out, we're seeing the Moody's downgrades come to take place here, and then we're having a cash crunch in there. How do you read this and the kind of impact you think it will have on the banks in the first quarter?
I think it will have a negative impact. You just said it up. The cash crunch that we are experiencing, which we caused ourselves. Lack of innovation or lack of clarity or lack of thinking out of the box from the CBN. The banks will exonerate themselves from it, even if we know that banks staff have been called culpable. But definitely, like you know, in an economic cycle, there are ups and downs. We could see those down affecting them in the first quarter.
Yeah, because it's going to impact deposits. It's going to impact some certain key metrics for the banks.
Yeah, that one said in the first quarter, we could see that affecting them, because even a lot of customers are not happy with the banks. Some of them are beginning to think about to move their deposits. Some of them are still keeping their cash at home, even if the CBN have said, in short, to make matter what CBN say, you are free to return those cash to CBN whenever you want to. But this is to be a longer tender by 10th of February. They are not concerned about that. So definitely it will affect the first quarter result, but I don't think it will be that, it will affect, but it will be marginal. Knowing that it's the informal sector that drives this economy. But this informal sector that drives this economy does not hold so much liquidity or cash like the formal sector that actually more or less are in the banking space than the informal sector.
But what do you now make of, because I was going to go also to the telecom space. Earlier you talked about MTN, but I also wanted to get into Airtel Africa and the results that came out there. We're also seeing the impact of mobile money, a critical part segment of their business as well, and kind of fits into this whole theme that we're talking about here, talking about cash and availability of making the ease of making transactions.
Yeah, Kennedy, the challenge we have in Nigeria is that when you look at other developed countries like Kenya that have used that platform to actually widen their profit margin, their telecom company there, they concentrate more on the rural area, and they got this infrastructure in the rural area because they were more interested in getting financial inclusion from the rural area. In terms of Nigeria, you know that most of these telecom companies have not done those drive into those rural areas, and also because of insecurity. So they might not enjoy the kind of patronage that we think they will enjoy. And even if they will have to enjoy, then they need to do a lot of investment. And those investments should not be done in the urban area, should be done in the rural area. So if they are able to get that right, getting most of the investment in the rural area, get the unbankable rural area right into the thick of the action, definitely, I think it will be a game changer for them.